Chris Harkins of Delta Trust Investments keeps his eye on the markets and his finger on the pulse of investors. Well, what's trending in the world of finance, and what do you need to be focused on in the near term? We caught up earlier for a conversation on these topics and more. All right, Chris, first quarter ended last week. Always a good time to review what's been trending over a 3-month period. It also signifies the time frame for letting those clients know what's been happening with those statements that you guys will send out quarterly. Describe the first 3 months of the year for us from an investor's perspective.
A very strong first quarter. We basically had pretty good earnings that came out in January, basically end of the year, fourth quarter results. Pretty much in line, a little messier than the previous 3 or 4 quarters. And I think that's really what a lot of people are waiting for, anticipating this next quarter, next couple of weeks, we're going to see the first quarter results. So a little messier. However, the markets are up dramatically. What we saw that was kind of interesting is there was a shift, particularly in March, where there was a movement away from utility stocks and blue chip stocks, a movement into the NASDAQ and also small mid-cap stocks. So it looked like risk was beginning to come back in to play. And I think part of that was just an adjustment in portfolios to bring in some smaller cap, mid-cap, and some more growth stocks, and maybe lighten up a little bit on blue chip and utility stocks.
Quarterly earnings are slated to roll out starting next week, Chris. What are your expectations?
I think they're going to be a little messier, a little louder. We had a really great 4, 5, 6 quarters in a row. Again, as I mentioned in January, numbers were a little messier. I think they're going to be noisier this quarter. We're already seeing some of the companies are front-running earnings, kind of downplaying and settling down analysts' expectations. The market's going to be really keying on that. We'll start seeing things in the next couple of weeks. So I suspect still pretty good results, but I think there'll be a few more disappointments than we saw the previous quarters.
You mentioned the word noisy. What does that mean? What do you mean by the word noisy?
Well, what's been going on essentially is that we're seeing a bottom line growth. I mean, clearly with unemployment as high as it is right now, productivity is off the charts. So a lot of the growth has come from squeezing margins and the efficiency of what they're earning. What we're not seeing are sales results. So that's an issue right now. So I think the noisy will be the margins have been squeezed so much we're not really going to see the results as strongly as we did the previous quarters. A noisy being that if they're not making money in the top line sales, a lot of the benefit in the margins have been squeezed out. I think it's the results and the comparisons are going to be a little tougher.
What's influencing the financial markets today, Chris? Is it one overarching theme, or is it kind of a combination of events such as the high price of oil or unrest in the Middle East, European debt, things like that?
Yeah, all the above, really, Roby. That's the big deal right now. Is I think part of it is the good news is that I think our skin is thickening here. Clearly, if you look at all the news and all the information that's been thrown at us the last 4 or 5 months, stock market's rallied 20-30%. That tells me that maybe, I'm hoping that the markets are looking out 12, 18 months instead of next week's next day. But clearly with Europe, we went from Greece, now we're moving to Spain and Italy and Portugal. Situation in the Middle East almost seems always, but clearly with Iran, what's the outcome there? Whether or not Israel makes a move, that's unfolding. And as you mentioned, the price of oil. Clearly we've seen about a $20, $30 move up in oil since Iran started their saber rattling. I think half of that is speculators. The other half is the fear of higher rates. If things tamper down there, then I think we could see oil prices decline a little bit, and that'll take some pressure off the markets, off of inflation, off of the concern of the investors, and maybe it can help get the market going again.
Well, there are some changes in the works related to disclosure fees for those with 401ks. Tell me a little bit about this subject and how you guys are preparing for this.
Yeah, absolutely. This is a big deal, and clearly what's happening right now is the Labor Department, one of their entities, is requiring those that are providing information, providing 401k retirement services to disclose fees. So what we're going to see here, and it was delayed, it was supposed to come out in May, and they pushed it out to August. What we're going to see now is a disclosure for employer and employee participants. They're going to see a greater disclosure of all the fees, the costs that go into their 401k plans. So in August, I anticipate the statements that you receive at work will have a disclosure not only of performance, but also of the costs and fees from the internal expenses of the funds you choose, plus the expenses of the plan itself.